Hey everyone, good morning. Marty Missouri here, January 22nd, 2019. Just wanted to really quick update you on the chart we've been looking at for the last few weeks. The S&P 500 daily chart that I created for you right as we were beginning to approach this 2600 level here on the S&P. I warned you that this looked like some real resistance as it has been both resistance when I go back further than a year, as well as support for the market. Typically, when you break down through a support line, it can act as resistance. And it did for a short while, looks like about 5 days or so, before it broke through there, threatened to test it just to see if it would be support again, didn't even quite touch it, shot through an area that I actually thought might be even stiffer resistance because the 2630 also coincided with the 50-day moving average. And what was perceived as good news on trade, China's suggestion that they can eliminate the trade imbalance over the next few years, shot the Dow up over 300 points on Friday. So we're sitting in here this morning, although as I speak, the S&P is down 18 points and the Dow's down about 180 this morning. The market just opened a few minutes ago. As I've been suggesting, the good news that would keep us moving higher through these obvious resistance levels, and this is the 200-day moving average, which is giving us a better look now that it's flattening out, would be on trade, specifically the trade war, in air quotes, with China. I noticed yesterday afternoon that S&P 500 and Dow futures were trading off to some degree, not a huge degree. And then I saw them tank lower for a bit in the afternoon. And it came actually on the heels of a tweet from the president. It was interesting because his previous tweet on the China situation, which was a day or two earlier, suggested that the talks were going really well, as good as could possibly be expected. Clearly, his message was optimism. Well, yesterday's tweet was different. It came after news that the Chinese economy has grown lately at a pace that is the slowest it's seen in quite some time. Now, just to speak to that, because as you know, we are the students of global economics here, the Chinese economy is becoming more of an advanced economy. The days of 10+% economic growth are long gone for China. And therefore, you're going to see a steady slowing growth over time. I do believe that that slowing has been exacerbated by a number of things. One would be a deleveraging effort in China. More recently would be the weight of this trade skirmish with the US. So China's slowdown is something to pay attention to. When the president speaks to that, and speaks to the fact that China needs to negotiate because their economy is hurting. I think that's legitimate, but I just don't want to overdo it and suggest that they actually could be growing at a much, much faster clip, when in reality, the sheer size of their economy precludes that. But the president's comment yesterday was China needs to quit playing around and get serious about a deal. The extent of the decline in the major averages literally doubled on that tweet because that directly conflicts with something he said just within, I would say, 48 hours at the most earlier. And there had been no dialogue in between that I know about. So that kind of commentary doesn't help in a sensitive market that has a trajectory at an angle that really is unsustainable anyway. So good news on trade, I think, continues to keep us moving in a forward direction. Concerning news on trade is what will have us come back and test these levels. Now, this 2630 that we blew right through would make perfect sense to me that at a minimum this week, we come down and test that level as it was so prominent here historically. So we'll see. Again, news like I just suggested would be the catalyst for that to happen. The question is, will it hold up? Because if it doesn't hold up and then we come crashing down through this 2600, then we'll come down and then I think we'll build some momentum to come down and test this December 24th low, which almost always happens during corrections like this. In fact, we are anything but out of the woods just yet. It's 3 weeks or so that we've experienced this nice V-looking recovery is substantially shorter than virtually every period between the first leg of the W and the last leg of the W, and just about all of the similar corrections that we've reviewed herein historically. So just from a pure time standpoint, this nice encouraging move on really bullish intraday action We are nowhere near the time that we normally see between the first leg of the W and the second. I can tell you that market technicians are still expecting that. Some of them are counting on that. History says it's highly likely. I don't know though. There's enough potential catalyst here. We could see the government reopen over the next few days. And even though I don't think that's been much of a weight on the market, I think it will be ultimately if it continues. And I think when it ends, it'll be a little bit of a boost at least. But again, that trade rhetoric has got to continue to be positive, and ultimately, of course, we need a solution if we have any hopes of getting back above these September highs and resuming this bull market into the future. So, folks, I'll leave it there for now. Just wanted to prepare you for some downside volatility. As I close here, the Dow's down about 160 points. That's no big deal, percentage basis by any stretch. The S&P is at 2651, another 21 points or so, a little less than 1% from here would get us down to test this 2630. See some big volume and some big buying at that level. That would be consistent with the bullish action we've been seeing intraday. If we break through that with some force and then back through that 2600, that would tell us the near-term sentiment has changed among traders and they're looking to test this lower on December 24th. It'll be met with great consternation because that's a pretty good percentage drop from where we are right now. But I can tell you this, all things being equal, it'll probably clear the way for some nice gains above this level if indeed we do come down and test that soon without some new fundamental catalyst forcing it down below that level. Thank you as always for watching and listening. Talk to you again soon. Take care. Bye-bye.